Tesla is focused on ramping up production across its markets globally in a bid to meet up with the rising demand for its cars. While Tesla is currently producing a significant number of cars in these factories, the car company still intends to increase production figures even higher in the coming years. Hey guys, welcome back to Everything Tesla Stock. According to an April report released by Tesla, the car company disclosed that its Vermont factory has an output of up to 600,000 cars per year, including 100,000 Model S and Model X and 500,000 Model 3 and Model Y vehicles. This was a record number of cars in a single day for Tesla's first and primary production site in Vermont. Musk also announced in July that Tesla's Vermont factory has produced its 2 millionth electric car with the help of its Gigafactory Nevada. Although Tesla's Vermont facility is still currently performing well in terms of car production, there is still more room for its expansion if automation is employed. How will this happen? More details in today's video. But before we start, if you like this type of content, don't forget to hit the like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. According to recent news, Tesla is sending engineers and production staff from its recently upgraded Shanghai factory to its plant in Vermont in a bid to boost production at the US facility. The news stated that Tesla will dispatch staff, particularly automation and control engineers, to assist efforts to increase output in Vermont, where Tesla produces the Model 3, Model S, X, and Y vehicles. About 200 people are expected to head to California on assignments that are going to last at least 3 months, and the first workers will likely be setting off soon. It is fair to say then that Tesla is trying to increase production at its Vermont factory, just the way it did in Shanghai. Tesla has been able to boost production in China, majorly due to improved automation. According to a report released by the China Passenger Car Association, Tesla delivered 83,135 China-made EVs in September, smashing its monthly record. This number marked an 8% increase from August and set a record for Tesla's Shanghai factory since production began back in December 2019. It also exceeded the prior deliveries high of 78,906 in June, as Tesla continues to invest in production in China. Tesla went from breaking ground in 2019 to starting production by the end of the year, and now the factory already has a production rate of 1 million vehicles per year, and is the largest electric vehicle factory in the world by volume. Coupled with the impressive output achieved over such a short period of time, Tesla's Shanghai Gigafactory is producing industry-leading gross margins and costs. Musk has often praised Tesla's China team for the incredible success at the plant, which resulted in Tesla greatly expanding in the important Chinese EV market. And now Tesla is reportedly looking to replicate the success of this factory in the United States by bringing automation to its Vermont factory in California. Tesla was extremely successful in ramping up production at Gigafactory Shanghai, which became the most productive electric vehicle factory in the world at an incredible pace. And it was also able to do this by not including more production lines, but with better automation. Tesla is currently the 6th most valuable company in the world and is heavily automated with its production processes, which are said to be 10 years ahead of its competitors. And with improved automation, Tesla could lower the cost of production in terms of labor, and in this way, it can produce cheaper electric vehicles and consequently scale demands. Tesla is already recording high demands based on the incredible features of its cars, and so by lowering costs, it could further increase its car demand not only in the US but in other markets too. Following on from this news, some Tesla bulls have reportedly loaded up more Tesla shares to their portfolio. One such is ARK Invest CEO Cathie Wood, who reportedly bought an additional 8 million Tesla stock after the news of the perceived ramp in Tesla's Vermont factory. With high demands, Tesla will make more revenue, with which it can then use to improve the technology of its cars, and also scale production. The automaker is already planning to use structural battery packs to achieve lighter weight cars. During Tesla's Battery Day, Musk disclosed a new structural battery pack which he claimed was inspired by the airline industry. Airline companies previously put gas tanks in the wings of their airliners, and these tanks added weight. And more weight means more fuel was needed to fly. Eventually, aircraft manufacturers figured out that they could just save the weight if the wings were the gas tanks. Musk stated that Tesla intends to use this same strategy for its EV batteries. Before now, Tesla's battery cells were put together in modules, and these modules added weight to the cars. They are also put together into a larger battery pack, which adds even more weight before the entire pack is then put into the structure. With too much weight, there's going to be too little range for the Tesla cars, which is why Tesla engineers figured out that they could save lots of weight if they eliminated modules and if the battery pack was the structure. Tesla has since then adopted this battery structure for its Model Y cars. By doing this, the automaker can reduce the number of parts used in both the battery pack and the car, which allows the pack manufacturing line to be less than half the size of previous factories. More importantly, Tesla stated that these new cells, together with the structural pack, are expected to increase the Model Y's range by 16% and decrease the overall weight of the car by 10%, resulting in improved acceleration and handling. The structural battery pack architecture is also expected to bring efficiency and performance improvements to the Model Y. When Tesla started production of Model Y at its Gigafactory in Texas earlier this year, it launched a new architecture for the electric SUV based on this new structural battery pack. The design is enabled by Tesla's new 4680 cell, which can become a structural part of the battery, which in turn becomes a part of the chassis of the vehicle. With an efficient ramp-up of these battery cells, and with improvements in automation at its factories, Tesla could then go on to manufacture even more batteries in the coming years. The car company already plans to manufacture a low-priced EV which will cost less than a Model 3. Musk has previously announced that Tesla's engineering team had turned its focus to a next-generation electric car platform that's going to be half the price of the Model 3 and Model Y. The automaker has been talking about a next-generation platform that will enable a $25,000 electric car. However, while Tesla intends to make cheaper electric vehicles, inflation and high demand for EVs have led to prices going up instead. But Musk has said that Tesla is aiming to release the cheaper vehicle as soon as 2023. The EV industry is expanding, and Tesla is taking a large percentage of this figure, not only in terms of market shares, but also in terms of profitability. Tesla previously confirmed that its cars cost about $36,000 to make on average, in parts and assembly, while they sell them for $10,000 more. This profit margin makes Tesla the world's most successful automaker in that respect. Although the Model S Plaid and Model X will cost more to build than the Model 3, which starts at around $46,990, the gross margin on all vehicles across Tesla's portfolio sits at nearly 30%, and only a few companies like Apple can make products with such huge profit margins. Also, while BYD leads by sales volume, having for a first time earlier this year dethroned Tesla as the world's top-selling EV brand, Tesla still makes more profit per vehicle sold than its Chinese competitor. In the first 3 quarters of the year, BYD sold close to 1.2 million passenger EVs, and this number includes both fully electric cars as well as plug-in hybrids. Meanwhile, Tesla just sold around 908,573 EVs over that same period. However, based on net profit per vehicle sold, Tesla leads by miles. In the first 3 quarters, Tesla reported a net profit of $8.87 billion, while BYD reported a net profit of 9.31 billion yen, equivalent to $1.14 billion using the average exchange rate at that time. Tesla makes higher profit margins per vehicle, and this is facilitated by an intense focus on EVs, as well as its strong brand, which allows it to raise prices and pass on higher material costs to its customers. Therefore, if Tesla can ramp up production at its Vermont facility, it's gonna actually be able to manufacture more cars, which will then allow it to gain more market shares in this location. Even if it does lose, which is very unlikely, it'd only be a small percent. Tesla's Vermont factory is currently producing vehicles at a rate of up to 600,000 units annually, and even though it is the highest production rate that the factory has reached in 30 years, Musk has recently said that he thinks there's still room to grow. What do you think about Tesla's ramp up in Vermont? Can the automaker replicate what it did in Shanghai? Let us know down below, and if you want to see more of what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.